Meanwhile, the Magnificent Seven dominating markets this year, and now as investors searching for returns in other pockets of tech. And our next guest says one area they might turn to in the new year is internet stocks. Ygal Arounian, Director of Internet Equity Research at Citi, joining us now. Ygal, it is great to see you. So, strong year for your coverage universe, Ygal, average return about 40%, and you see that momentum continuing, Ygal, in 2024. How come? Walk us through the reasons.
Yeah, certainly. So 2023 was a great year for internet. It was a rebound year off of was a really tough 2022. Like you said, Josh, our coverage across about 50 internet stocks was up about 40%. A lot of that was really driven by, like you said, the Magnificent Seven and larger cap internet stocks. We think the fundamentals within the internet universe are continuing to be strong. If anything, they'll strengthen into next year. That includes share gain across a number of sectors like e-commerce, like digital advertising, like website builders, for example. And all the momentum that's kind of driven internet over the last few years should continue. Now, in a better inflationary environment, better consumer environment, hopefully as we kind of get through this last leg of a more challenged consumer, lower rates, I think all that supports growth within internet stocks. We saw a good amount of multiple expansion in 2023, but we're still below historical averages across the internet sector. So there's more room to run within multiple expansion. We think we can start to see upward estimate revisions. We think all that sets up for a really good year in 2024 across internet. And then one of the last things is that so much of the gains have been centered within those larger cap stocks, and we're already starting to see investors focus on a broadening of investments and looking for more outside of those. And we think all of that really sets up for a great year in 24.
Ygal, it's Julie. It's great to see you. One of the other things, of course, that was a big theme this year has been generative AI and the sort of birth of the excitement around it. How do you think that's going to play out for your coverage next year? How are these companies going to start using it? How is it going to help them? What kind of changes do you think we're going to see here?
Yeah, so generative AI obviously burst onto the scene this year. And one of the things that I think we'll see more of next year is actual real implementation of AI across different end businesses that will start to drive more meaningful change. So this year is kind of here's Gen AI, here's what it is, and everyone's starting to learn and figure it out, especially among the investor community. There was a lot of debate on who would be the Gen AI winners, who would be the Gen AI losers. And as we've kind of gone through the year, we've started to understand a little bit better how it'll actually impact different businesses. And so I think we're going to see a lot more of that in 2024 that will impact different companies and different businesses in different ways. But we think that's going to be a huge thing next year.
So Ygal, let's get some picks here for viewers. One name I thought that was interesting, Trade Desk, Ygal. And that one, you got to buy on that name. It has roared higher this year. It's up about 65%, but you like the name. So you see it moving still higher in 2024?
Yeah, Trade Desk has been really a phenomenal company, a phenomenal investment over the last couple of years. One thing is just that at the macro level, we saw a rebound in the ad market this year. We think that continues next year. We've done surveys of advertisers, of SMBs, and the intent to spend, to accelerate advertising spending next year is moving up, and it's moved up over the course of the year. So 2023 was a better year than feared in digital advertising. I think that can continue, especially if we're in a soft landing, no landing scenario, which seems a little bit more increasingly likely. So a better ad market next year. There's a political spending next year that helps. And Trade Desk is really centered, their growth is centered around the shift from linear TV to streaming TV. And they are very well positioned there. That's really early days in that shift. Even though you're seeing about 50% of viewership now on streaming, the ad dollars are lagging. We're maybe about 30% of TV dollars are spent on streaming versus traditional linear, which is about 70%. So I think we're still very early days, and Trade Desk is very well positioned within that.
One of your other top picks going into next year is Wayfair, and that one caught my eye because we have seen such cyclicality in sort of the online furnishings market, right? So do you think it's a normalization period for Wayfair, or do you think we're actually going to see a boost to growth here for the company?
I think it's a little bit of both. And one of the most interesting things for Wayfair is that it's been in what's been probably the most challenged consumer end market, right? Home furnishings. It's continues to be down significantly year over year. But a lot of that is still on kind of deflationary pricing. If you look at orders across the industry, we're flattish. But overall, that sector has been pretty challenged. Wayfair is positioned pretty well within that. Over the past couple of quarters, they've been taking share, and they've been faced with a lot of challenges, supply chain challenges in particular over the course of COVID. A lot of that has normalized, but we expect that continued shift to e-commerce. Wayfair is really positioned really well within that. So we do expect some normalization. It's been almost 4 years since everyone was locked at home and bought every piece of furniture that they needed for their house. So I think we'll get some sort of renewal cycle. Consumer starts to get healthier over the course of the year. And then, a lot of the Wayfair investment is also about improvements in margins, some cost rationalization that we've seen this year. There's a real kind of path forward to real improvements on the margin side. We think that will play through this year, which means a lot of the story and the challenges around burning cash and negative margins that have played out over the past couple of years really start to improve, and the company can get to much more solid grounding, fundamental grounding in 2024.
And Ygal, I want to get you out of here on one last pick, VeriSign, another name you like. That stock is going to finish the year, Ygal, basically flat here. What are the catalysts you think that move this one higher in 2024?
VeriSign's an interesting one to finish off on for sure. Look, what we've seen from VeriSign is over the past couple of years, the trends within the .com and .net domain growth, which is where their business centers, has been soft. We've been expecting to get back to some more normalization within the domain growth environment. It's starting to play out a little bit, but .com in particular has lagged. We still think that that'll improve over the next couple of years. .com remains the dominant domain. As the health of the economy gets better, we'll see more domain registrations, more businesses starting up. And then one of the best parts about VeriSign is that it's got incredible margins. It's a 75% EBITDA margins. They generate a lot of cash. It's a really safe play. So it's a stock that we really like, both on the cost side and on what's been under normal growth, let's say, over the past couple of years, and we think we'll start to get back to that normal growth rate.
Ygal, great to see you once again. Hope you have a great start to the year, and we'll catch up with you soon.
Thanks, guys. Great to be back.
Thanks.
Happy New Year.
You too.